Awesome.
Mrs. Hughes has been out a few nights in a row, and she's out tonight. So I've been
picking up the parenting slack.
I've been bath and bedtime. Oh, I have to say, kids have been brilliant. Actually, they're a lot of fun at the moment, full of Christmas joys.
Yeah, but I find that the kids behave far better with me than when Mummy's around. Hoping she won't hear this.
I would say the same, actually. Well, Lily's very excited because she's got a Build-A-Bear calendar, which means every calendar door that opens.
Not chocolate. Chocolate's more fun.
No, well, she's got chocolate as well. Of course she has. Yeah, so the first box was a bear, and the second one was a little coat, and there's a scarf. So she's
that's
enjoying
quite nice.
It's actually really nice. And she's obsessed with this bear, so he won't go anywhere without it. It's very sweet.
Lovely. Well, Mrs. Raymond's got her Christmas due today, so I did drop off and I'm doing pick up tonight.
Oh, yeah.
Which means I get about 3 hours in the office by the time I have to commute both ways. 1 hour of that is doing a podcast.
Yeah. Well, I'm back-to-back meetings, and I've got lunch with an old colleague today that used to sit on this podcast, which I'm very excited about.
Oh, that's nice.
Seeing Dave.
Good.
And obviously, because I've got to get home early tonight for pick-up, or nanny handover,
You're so sorry.
I know. I thought, that's embarrassing. I thought I'd get a gym session in before work.
Mm-hmm.
So I got to the platform at 6 a.m. only to have the train cancelled. I have to wait half an hour for the next one.
Not good. Well, I was hoping to have a really good week in the gym this week, but I've had a sort of bit of man flu and a bit of a cold, so I'm
you are struggling, aren't you? Is that from the kids?
Probably. I mean, who else carries germs this time of year?
There's some term, isn't there, for kids and germs? Someone said it the other day. It really tickled me. But I don't know what it was.
Kids, hey. No, but excited. My silly season's a relatively quiet start, actually.
Yeah.
I know we're out tomorrow night with the local parents. We've got a big night out in Wokingham, of all places. Yeah. And then it gets a bit busier next week. A few lunches, a few nights out.
Actually, we've got curry night with some mates from home, which would be really good. And then some drinks up in town, actually, after... When's that? Next week, I think, after our Christmas party. So I've got a Christmas lunch with Des, followed by drinks.
Oh, love the back-to-backs. That's the best.
I know. Well, it's brilliant.
Can you manage 12 hours of drinking?
I know. It's brilliant until the next day. And actually, I've got a couple of meetings the next day. So I'll have to be...
Well, if you're thoroughly professional, and you'll be drinking Guinness Zeros.
Well, that's the trick.
Mix them in.
You don't notice I do it, do you?
No, well, I have spotted it, yeah.
The trick is when it's I'll always try and get the first round and I'll get a zero.
I mean, it was good last Thursday. We went to the pub around the corner, didn't we? And there were a lot of the, what I would class as youngsters, but the sort of the trainees and the ones in their 20s. And you and me were buying the rounds, obviously.
That's great.
Putting hands in our pockets. The kids were all there drinking their Guinness, having a nice time. It was good.
I was made to drink a couple of baby Guinnesses.
Were you?
Yeah. I had those for a long time. So it was a Guinness Zero with a baby Guinness shot. It was great fun.
Good.
But that was probably, it did make me feel like we're a bit past COVID. That was really good.
Well, it just takes me back to my days when I was in my 20s and you'd all go, we were in Shepherd's Market in those days in the West End, and we'd all go and the seniors would be there buying the rounds.
It's a good way
sharing stories.
Yeah, it's a good way to bring up camaraderie.
Yeah, totally agree.
Friendships, and it makes the office work better. So,
What do you reckon about these markets in Husey? Are we in for a year-end rally? Santa rally coming?
Going higher.
Cool.
87% statistical chance of a year-end of a Santa rally. I think it's based on if October is a positive month, then usually you get a year-end Santa rally.
Okay.
So JC Parrots has been
JC Parrots, easy man.
He's very good, actually.
Well, should we get cracking? And then we've got a few chances. We've only got a long one today. But hi, everyone, and welcome to Taking Stock After Bell, episode 58. Goodness me. Not another budget podcast / webinar, you'd be pleased to hear. So we're going to try and keep references to the budget as far away as possible from this, because you're probably all sick of it by now. But it's been a sort of entertaining few weeks in markets, hasn't it? I mean, nothing ever goes in a straight line, and we're always kind of surprised.
No.
It was a sort of bit of a wobble and kind of bit of a sell-off in some of the sort of more speculative areas of the market. But just for the record, first chart here, equity indices year to date through the end of November, early December. The leader in 2025, believe it or not, are European equities, up 24% in sterling terms, total return, including dividends.
That's incredible, isn't it?
Amazing. Emerging markets, 23, UK 21, Japan 16, and the bringing up the rear, the US at 10.7%. So
yeah,
not what anyone had in their bingo cards at the start of the year.
No. And what's the US done in dollar terms? Do we know that?
It'll be a bit more. It'll be nearer 17, 18, I think.
Yeah.
But that's not the exact figure.
It's funny because if you listen to media and commentary, it's all about the US and that's what's performed again. But it's not. I mean, UK's almost done. They've done double what the US has done.
Yeah.
Not far off.
Exactly.
20 odd percent versus 10.
Yeah. The most boring index in the world with a lot of consumer staples and some oil companies and some banks. And zero tech.
Who'd have thought rates going up and increasing net interest margins was profitable for banks? Eh?
Yeah, the bank story is quite interesting, and a lot of people think there's got a bit more room to run.
Probably has. Yeah.
The likes of Barclays have doubled already. Santander's doubled. Like a lot of these European, UK banks have done phenomenally well. If you didn't own many of those.
That's actually where it's actually been very hard for active managers to keep up in Europe because it's a lot of the second tier banks that have absolutely exploded that they just didn't own. Actually, kind of the big stock, the big popular European stocks haven't actually been great.
Nope.
So
Novo,
LVMH, Novo, yeah, exactly. They've had a tough time. So
Nestle.
It's been, Nestle has been tough. It's actually been beneath that, slightly more, I guess, speculative areas that have done very well.
Yeah.
So you've had to be quite careful on how you've picked Europe.
And it's been the same in the UK. Like, I always sort of, there's a cohort of, dream darling quality stocks that I always think about. Experian, Compass,
Relex.
London Stock Exchange, and Relex are the four that always springs to mind. In dire. I mean, I think they're down year to date, and the market's up 20 odd percent.
Probably down on average 20%.
I think Relex is down 25% from its highs because it was 40 quid and it's now 30.
I was looking at it last week actually with a view to topping some up because the quality businesses do this, don't they?
They do. Well, you get a rotation trade. So if you want to start buying NatWest and Barclays and Lloyds, you've got to sell something. Yeah. And they've been the funding stocks, haven't they?
But you'd have thought with rates falling, they'd have been relatively resilient.
Yeah.
But I guess maybe the multiples got slightly stretched, but the businesses are in very good shape. I mean, earnings from all those businesses you've just mentioned have been very good.
Yep. So anyway, we did mention a sort of bit of volatility in October, November, and it was in the sort of, interestingly, it was the NVIDIA results that kicked it off, didn't it? If you remember, at the end of October, just after the last podcast was recorded.
It was.
The NVIDIA results were
incredible.
Blowout.
Yeah.
And we, chart here is the MSCI technology sector versus the US market. And we can see that it's underperformed marginally.
Yeah.
Over that period, albeit it is up. What's the chart on? But it is still up year to date. So the tech sector in the US has outperformed the broader US market by about 10% year to date. We can see the tariff period into March and April where it underperformed and then it obviously outperformed through the summer. And then we just had that sort of little setback, which I think to me feels quite healthy because actually it was the more speculative areas of the tech sector. It was the Palantirs, which is your biggest PA position as far as I can tell.
I know, it's been incredible. I wish.
MicroStrategy. And in fact, we've got a Bitcoin chart here, which kind of.
I mean, Bitcoin is really the new VIX index, isn't it?
Well, yeah.
It just shows risk on or risk off and the way investors are feeling. But I saw there was some regulatory news out from China again on Bitcoin that they're really stamping down on it. They want to essentially get rid of it in China. I know they've talked about that for some time, but
I've not seen that. Is that right?
Yeah, they as you could imagine, they don't want an alternative currency to one that they can control. So I think that had a bit of an influence. I mean, part of the NVIDIA or the tech sell-off sort of started with Gemini coming out with a very good new platform.
Yeah. Gemini 3.
Yeah, and which has been really well received. And then hearing Anthropic have also their new upgrade has been excellent. And I think ChatGPT 5 was fell on its face a bit, didn't it? It's a bit flat.
Well,
so
it's okay. I mean, I use it and I'm a paid subscriber and it's good, but you do sometimes have to, say what's going on. You sure about this?
But I think there's a bit of an eye open in terms of it's not, ChatGPT isn't miles ahead. There are alternatives that are as good, if not better.
And Google are not using NVIDIA chips as much, are they?
Correct.
Because they've got their own chips.
TPUs.
What's TPU stand for?
Don't ask me that.
Tensor processing unit.
Is that right?
That's right, yeah. So they've designed them themselves, which is saving them quite a bit of money over using the expensive NVIDIA GPUs.
And I saw Amazon have come out with some chips as well.
They have, yeah. So it's interesting how that whole dynamic is.
That moat around NVIDIA is still there, but it's...
Well, perceived to be weaker following the release of Gemini.
But I guess it's more about the operating system still, isn't it? It's about CUDA.
Software, yeah.
Yeah.
So no, it's been entertaining 6 weeks.
Yeah, I think it's been quite... As you say, you never want to see markets fall, but I think it's quite encouraging that we're not just going off to the races, and we were remembering there are risks around the markets being, I think, quite rational, to be honest.
And my understanding of 98, 99, 2000 was that people were just buying anything in sight. There was no degree of, trying to rank these stocks or come up with better ideas or worrying about, certain companies. It was just buy everything and everything was going up. So, for those who are still thinking we're in 98, 99 bubble territory, we're absolutely not. The market is being quite discerning.
I think the other thing with 98, 99 was you had a new IPO every other week that everyone loaded into, and it was doubling, tripling, a day after trading. You're having mining companies changing themselves to .com. There was full excess in the market.
Yep.
It's the IPOs they're not there.
Well, they're saying that Anthropic, which you've already mentioned, a story in the FT yesterday that they might be coming to market next year with a very cool 300 billion.
Yeah, I only saw it because Ben messaged us last night.
He did.
Ben, our tech analyst who we had on last week, or 2 weeks ago. So with Anthropic coming to market potentially, and with OpenAI potentially coming to market, the size of those businesses, that is going to be a drag on what the market indices do, because you have to fund those positions from somewhere. And if you're buying Anthropic and OpenAI, the likelihood is the money comes out of NVIDIA, Alphabet, Meta, etc. So you'll have a suck on capital, which will, in theory, get those share prices falling. It'll be interesting to see what happens there. But
and the public market's appetite for it.
Yeah. I mean, obviously, it doesn't all come from stocks. There will be fresh capital coming in as well. But it'd be interesting to see how that plays out.
But just looking, to come back to the point about NVIDIA and the bubbliness. I'm not going to put this chart up, but the forward PE of NVIDIA is basically at a 5-year low, i.e. it's
23
today. It's 25 times. Yeah, okay. As is LSEG data. And that's cheaper than it's been pretty much for 5 years. It's normally traded up in the 40s and 50s on a forward earnings basis.
Yeah.
So again, the market is not, saying it's going to grow at 50% forever. It's been an interesting few weeks, but the market has sort of settled down. I think the other area of note, bond yields generally in the UK, US and Europe we've got a chart here of 10-year government bond yields. UK bond yields, which have been we were going to go to the IMF for a bailout back in the summer, but that narrative's all disappeared. Call BS on that at the time. UK 10 years at 4.5, just under 4.45. US 10 years back down at 4. Again, bottom of the recent range, clearly a lot higher than it's been for the last 15 years. But the one that jumped out on me here and that is not getting much scrutiny in the market is the Japanese 10-year government bond yield, which has been quietly making new highs, 1.9%, which is still pretty low in absolute terms. But if you've got as much debt as the Japanese, they've got 240 or 250% government debt to GDP. And you're paying 2% on that, that's a whacking interest bill. And the 30-year looks even worse.
What's 30-year up to?
3.5.
So they're not going to be issuing much long-term debt, are they, at the moment?
You wouldn't think so, no. And there's talk about the rates going up as well. So
they've got a new prime minister, haven't they?
They do, yes. And
she's quite growth focused.
She's allegedly the Japanese Thatcher, from what everyone says. Is
that right?
That's what they say. But I saw this piece from, I'm not going to put this on because we're not allowed to, but Albert Edwards, everyone's favourite bear, the legendary SocGen analyst, he actually wrote a note talking about how Japan, and I quote, "Are you ready for Japan to trigger global financial market Armageddon?" No less.
So, he does like the word Armageddon.
He does like the Armageddon.
every year he uses Armageddon.
Yeah,
so
he's clearly been wrong forever, but it's just one of those things that there's not many people talking about this.
No, but I think people like him are really important just to show the contrarian view or the other view, and just to highlight. I know he's always very extreme, but it is to show the other side of the coin. So I think it's quite important. But
well, of course, he was very right in his kind of Ice Age thesis back in the 90s about all you want to do is buy bonds, and bond yields just went down and down and down and down right up until 2022. So, it's one to watch that, because if that Japanese 10-year does
that could be an issue.
Yeah, definitely. And that will have ructions across bond markets and equity markets.
What do they represent in terms of global markets? In terms of
equities?
Bonds, yeah.
Quite a lot. I think it's come about 30% of global government bonds at Japan. Is that
right?
2020, 30.
And the Japanese government still owns over 50%?
50% through QE, yeah.
Yeah.
So they got a control on it in a certain respect. But they've still got a healthy deficit, so they're still having to issue debt.
Yeah.
And obviously they've got rolling off as well.
But finally they've managed to get inflation moving.
They have got some inflation. They've got some growth.
They've had deflation for 25 years, haven't they?
Yeah, definitely.
Where I think I had some stat that if you're an employee, you're doing well to not get a pay cut every year. Essentially, in real terms, you're getting a pay increase if your salary stays the same.
Yeah.
So,
well, I think they've now got positive wage growth, 3-4%.
Have they?
Yeah, first time for a long time. Generational.
But the Japanese equity market looks quite interesting, really.
Yeah. No, I totally agree.
Yeah. There's definitely opportunity there, despite the risk we've just discussed in terms of debt levels.
And then I guess the other debate as we kind of roll into 2026, and we'll probably talk about this because we're also at that point where analysts year ahead forecast reports are now coming in. I've had
10% earnings growth,
7% return for the S&P. It's just the classic. Yeah. But the one big debate really is about kind of inflation and the economy in general. So inflation has moderated. Just take the chart up here, Alex, slide 7. And yeah, UK inflation is kind of dancing a little bit to its own tune because of government mandated prices, rail tickets and energy, etc. But US inflation is 3% CPI, and it's ticking higher, not coming down. And it's quite a long way above the Fed's target of 2%. And T.S. Lombard in particular have got this thesis for next year that the economy reaccelerates as the sort of tariff uncertainty wears off. The labour market should retighten, and you get a bit of, fiscal stimulus is also hitting the US in the new year because they've got tax rebates.
He was talking about stimmy checks as well, wasn't he? That
$2,000 stimulus check. Well, that's what kicked it all off in 2021, wasn't it?
Yeah.
And that and the oil price.
So what's driving this increase in inflation? Because service-led inflation is falling, isn't it, in the US?
It is, yeah.
So what other factors are
Well, it's goods prices, because goods prices were negative year on year post the COVID wobble, but they've now started.
It's part of that tariffs that have been added.
Yeah, that will be the tariff effect coming through. It probably hasn't come through as meaningfully and as quickly as many thought, but it is still coming through.
And fuel pricing?
Well, the oil price is still pretty low, right?
Yeah.
So that's the one sort of thing that would stop inflation materially going higher, in my opinion.
Because you always make the point that you don't feel there can ever be any. Inflation is not a problem if oil prices aren't rising. So you need oil price increases to really have a spiral in inflation.
A proper spiral, but inflation could still go from 3 to 3.5 in the US. If the oil price is flat.
Would part of the markets, or why investors are relatively calm and actually looking towards being excited, is because of the rate cuts baked in. If inflation does start to shift higher, as you say, even by 50 basis points, even by 20, 30 basis points, that probably means the Fed stops cutting.
Yeah.
I mean, a December cut is baked in now.
It is like 80, 90%.
Yeah.
Despite it was only 25% baked in a month ago. So it's really changed in terms of what the market thinks.
And that's probably why we've had a bit of a recovery.
Yeah, that has definitely been part
the US,
of it.
actually.
Yeah.
But as you say, I think, inflation probably is the biggest, one of the biggest risks next year, because we all saw what happened in 2022. And if those Fed cuts, there's a pullback on that, / even rate hikes to try and control inflation. Because I think with inflation under 3, they are ignoring the 2%
They
rule.
are. They're pretty happy if it's under 3.
But if it's over 3, I think that's different.
Totally agree.
Yeah.
But there is a risk that it does tick higher, not lower.
We've also got a new Fed chair who is going to be trying to cut, which could be more inflationary as well.
Yeah, I'm not sure. I mean, the whole Fed independence thing, doing what the president says, that might be beyond the scope of what we could talk about today. But I mean, it does undermine the institution. The flip side is that if you do have a chair that is hell-bent on cutting rates because it's what the president wants, the rest of the Fed governors might decide to kind of harden their views a little bit.
So, did you read Dario's?
Might have done. That might be,
comment
probably
on this, which was, he was saying he believes Powell is encouraging dissent because it almost allows the Fed to remain more independent.
Yeah.
Because typically what the Fed chair wants is sort of done. You don't really have dissenters. But Powell's almost been taking the opposite view to try and encourage it, because he thinks if a chair does come in that has a very strong opinion, he wants the other Fed voting members to be able to stand up and actually go against.
Yeah.
So it's quite, if that is right,
that's quite.
Is it again
that would be his legacy.
From Dario Lombard? He's very good at thinking outside the box on this stuff.
Yeah, and he's definitely not consensual.
No.
So I think that I'm very sympathetic to that inflation re-emerging. The Fed don't cut, and almost as a sort of a bit of a mini rerun of 2021, 2022, when inflation kicked off, rates went up quickly, growth stocks, tech, the speculative growth names, the stay-at-home names, the Zooms and the Pelotons all got killed. Now, I'm not necessarily saying that we're all in for a repeat of that, but that sort of feels like the biggest risk to me for next year.
I think it is the bit. My gut is it's not going to happen, but it is a risk.
Yeah, and
it's something that we should think about. Whether that's index-linked bonds or we have them in portfolios anyway. I
actually did.
Or shortening.
Index-linked last week,
shortening a bit of duration. That sort of thing. Yeah. We can do things around the edges, but I think it would be foolish not to think about inflation at this point with some inflationary bits going on.
Because that's the worst of all worlds for a multi-asset spot 60-40 portfolio manager. Yields going up, inflation going up, stock market going down. Like that, there's nowhere to hide other than cash.
No.
Gold, maybe.
Potentially gold.
Potentially. The flip side of the sort of inflation re-emerging narrative is the labour market in the US looks like it might be falling apart. We've not had any data for 3 months, official data. So we're not getting jobless claims and we're not getting payrolls. We've had one payrolls, but it was delayed.
They're catching up on that.
They're catching up. But the chart here of unemployment, the blue line is the UK, the yellow line is the US. It is going up.
Yeah.
And we had an ADP, which is the company ADP, do a private payrolls report monthly. We had that yesterday and it was pretty ugly. There was some sort of comment that actually small business in America are beginning to shed workers, and that is a risk. So you've got...
Yeah, we haven't seen the shedding of workers. We've had one of the reasons why payrolls have been going, why the data's been going up is because there's more people entering the employment market.
Yeah.
So whether that's, a lot of people stopped working during COVID and I think had retirement aspirations, but have actually figured out they're either want to go and do something again, bored, or just need some extra capital because inflation's ripped. I think there is a cohort that are coming back to work. We had some long-term sickness issues as well. I think some of that's coming.
Massive problems in the UK.
Yeah, in the UK. Part of that's the
NHS.
Yeah. But in the US, some of that's coming back. I mean, you made the comment on migration, though. You haven't got...
Yeah, they clamped down on immigration, so there's no one entering the workforce, and there's a sort of immigrants leaving the US, which is tightening up the labour force a little bit. So there's lots of moving parts, and of course, not having any official data because of the government shutdown, it is quite a messy period.
Yeah, but number of jobs advertised are now at the same level as they were pre-COVID.
Yeah.
So we had that very big spike up and then slowly worked its way off, and we've got back to more of a norm. So it's not, it's not panic signs with it. It's just,
but again, it's one of those things in economics and in, when you look at the data, is it the level or is it the direction and then the rate of change? First derivative, second derivative, etc.
Yeah, true.
And very often it is the derivative, i.e. the rate of change and which way it's going. So I don't know. So that, the flip side to the US economy re-accelerating in 2026 is the labour market already falling apart? And do we need more rate cuts to firm it up?
Which would be good for stock prices again.
Yeah, unless the economy does fall apart,
True.
And then you get a washout. So there's sort of the competing narratives, which I find are really interesting. I think I'm more of the opinion that the economy re-accelerates from here, and inflation is more of a risk. But again, you have to be alive to both.
I think earnings season probably told us things are fine.
Yeah,
there's a very good earnings beat across the board.
Yeah, and the retailers actually.
Yeah. I think if the economy was falling apart, you'd have seen that showing up, and you'd have certainly had commentary from CEOs about business. Business is struggling. Actually, if you look at the Black Friday data, it was the biggest spend ever.
Yeah, Visa and MasterCard have come out with their Black Friday weekend data, haven't they? It was all pretty good.
Cyber Monday?
Cyber Monday.
Apparently Cyber Monday only came about because people over the weekend didn't really have access to Wi-Fi at home. So Cyber Monday was when they got back to work.
Up their desks and they had their lists from Sunday which they'd written on there.
That's honestly where Cyber Monday came from.
I think I used to do that.
Yeah, I think I did too, as a junior.
What a world. Maybe it should be Cyber Sunday night when you're on the sofa. You put the kids to bed.
That's an expensive time.
You're watching the NFL, as I do. Last slide of the day, I think. Sterling, which has been a really interesting one. So pound against the dollar here. Yeah. Sterling strengthened materially in the first half of the year from 126 at the start of the year, got to 137, 136. The sort of, I'm going to have to talk about it. The 6 to 8 weeks before the budget, which was just full of,
horrors,
kite flying and rumor mills about what was going to be in the budget. Sterling fell quite meaningfully, got to 130, but post-budget, pound has stabilised a little bit, back at 133.5. This is last night's close. That's kind of a good news story, isn't it, for the UK?
Yeah, and I think it's a reminder that things in the UK aren't nearly as bad as the UK press would make out. I mean, if things were bad, sterling would not be doing what it's done this year.
Exactly right.
And as we know, after the event, the black hole was not as advertised.
No.
Actually, finances in the UK are better than expected.
There's a bit of naughtiness there, wasn't there? But we're not going to go into it. No. I don't think there was a little bit of naughtiness from the Chancellor there. I feel
the OBR did give her an updated figure sometime before. But
Tuesday morning speech.
Yeah, we won't go there.
No. So nice to see the pound finding its feet a little bit.
It is.
And UK growth this year is going to be 1.5%, and next year might be a bit higher.
27 looks quite interesting actually, because it's, I think, GDP growth is accelerating again from 26, but some of that might be wrong because we typically forecast better growth. A bit like stock markets, we say every year earnings going to grow by 10%. Start there and work either backwards or forwards.
Oh dear. No, and the real bullish thing for me on the UK, private sector balance sheets, household and businesses are financially in a very strong position. But as I keep saying to anyone who listens, they're not in a position where they want to go out and spend any of that money because they read the newspapers and they read social media and they think that the UK is a basket case. Yeah. So there's no confidence. Now, the optimist in me would say, well, now that the budget's behind us and it's not that bad and there's not a load of tax rises coming in April like there were last April, then maybe we might, the housing market might unfreeze, consumer spending might perk up a little bit. Yes, tax rises are coming, but they're not coming till later on in the next parliament, are they?
No, so a lot of them aren't coming into a 28, 29. Yeah. So they've just kicked the can down the road.
They have. I think she's hoping that they don't have to come in at all and she'll be able to cancel them, but that's by the by. So having promised everyone that we weren't going to talk about the budget.
Still there, Jonathan.
If she's still there, of course. Having promised everyone we weren't going to talk about the budget, we have managed.
Oh, we didn't really.
We talked
about sterling.
We talked about sterling, which is fine. UK bond yields settle down a little bit. UK stock market flying.
Yeah.
So maybe all is okay in the world.
I think it's all right.
Been buying anything?
No, adding to existing positions really. I haven't been doing a huge amount. What about you?
Yeah, I just topped up some index-linked gilts last week before. UK index-linked gilts look really attractive. For anyone out there who's got a buy-to-let property, you can buy a 20-year index-linked gilt that guarantees a 2% real return. CPI plus 2. CPI averages 3. You're going to get 5% a year. And the kicker, it's tax-free. Index-linked gains are tax-free. 2%. You're going to get basically a 5% nominal return tax-free. Put that up against the buy-to-let. And let's see which one works best.
When tech's ripping, it's being ignored though, isn't it?
Yeah.
But you're exactly right to point it out.
There we go. Top tip. Yeah. Put it on your Christmas list.
Black Friday sale.
Oh, God.
Cyber Monday sale.
You're so boring, Jonathan. What are you doing? Buying index-linked gilts. Good. Call it a day. You got a meeting in 2 minutes.
Yeah, I have.
Good.
I think that's all.
Good. Thanks very much, everybody. We'll probably be back in the new year with, or maybe
we can do an annual wrap up, can't we?
We can do an annual wrap in the new year. Yeah, maybe with Christmas special with Christmas hats.
Wear your Santa hat. Do you remember? Christmas special would be good.
I don't own a Christmas jumper.
Yes, you do.
I don't. I have to borrow one.
I saw a very good one. I will show you after the pod. It was excellent.
Thanks everyone for joining us today. Any questions, let us know. He's james.hughes@quiltachieveit.com and I'm jonathan.raymond@quiltachieveit.com. We look forward to seeing you again soon. Thanks very much. Bye-bye.
Thanks.